Look, these numbers were quite depressing across the board. Investment, industrial production, retail sales, house prices, property investment, unemployment, they all came in on the weak side, weaker than expected and weaker than they were in July. So that is a bit of a concern. It does indicate that the Chinese economy is continuing to soften. If you go back a few months ago, it looked like things might have been picking up a little bit, but that's certainly not the case now. It's quite possible that things like the campaign in China to reduce excess capacity in industry could be having an impact. There was also heavy rainfall through part of August, so those things may be impacting. But nevertheless, the trend still remains towards softer economic data coming out of China.
You touched on growth in factory output easing. It hit a 12-month low. Combine that with increasing unemployment during a fierce trade war with the US. To what extent is it clear that the US position on trade and tariffs is now punishing China's economy?
I think it's still early days because the full impact of those tariffs, I think, is still yet to show up. But obviously the weakness in the Chinese data does highlight a degree of vulnerability in China. You've got the full impact of those tariffs still coming down the line. There's hope that China and the US will reach some sort of deal, but there's a lot of uncertainty around that. In the interim, though, I think we probably will see more stimulus coming out of China. It'll probably remain fairly incremental because it's not the case that the Chinese economy is going backwards, but I do think we will see more stimulus coming through in the Chinese economy.
What are China's options in terms of stimulus?
Look, I think it has a number of options. The main one would, of course, be to boost consumer spending. Tax cuts, subsidies to households to get out there and spend. They've been doing a little bit of that with subsidies to buy or upgrade new white goods and so on. But obviously they need to do a lot more on that front, particularly if they're going to be continuing to wind back excess capacity in the production sector in China. That could mean a further loss of jobs as the number of EV producers gets wound down, as steel makers get wound down and so on. To offset that, I think they really do need to boost consumer spending, and they have the potential to do that. Yes, they have relatively high levels of public debt for an emerging country, but they have plenty of flexibility. They borrow from themselves, so it's not as if foreign lenders are going to get upset if they expand their budget deficit.
How important is it to Australia's economy that China does provide some kind of support in the near term?
Look, I think it's critically important to Australia that China continues to keep its economy growing. And I think ultimately it will do that. And that's probably why we've seen the Aussie share market take the soft data out of China in its stride. Likewise, the Aussie dollar is still around about where it was on Friday. The iron ore price doesn't seem to have been much affected. And I think it's basically those markets are telling us that they do expect more stimulus coming out of China. And I think that's critically important for Australia because we do still export around about a third of our goods exports to China. The US is a very small market for Australia, but China is a very big one. And obviously, if the Chinese economy suffers to a much greater degree than is currently the case, then that will have a negative impact on Australia. But I think we probably will see more stimulus coming out of China, probably just enough, though, to keep the economy ticking over. I think one thing the Chinese authorities are wary of is doing too much and ending up with overheating the economy like they saw coming out of the GFC.
Are they also, Shane, wary of doing too much at this critical moment of negotiations with the US? Officials are in Madrid at the moment talking about trade once more.
Yeah, I think that's a good point, Kirsten. The authorities, if they do too much stimulus now, then they don't have much left in the bag later on when it might really be needed if these trade talks really break down. So I think there is an element there of the Chinese authorities holding a little bit back, holding it in reserve in case they really need to deploy, I guess, far more fiscal stimulus down the track if those trade talks fall over.
Shane Oliver, thank you.
My pleasure. Thank you.